All right. Well, good afternoon, everyone, and welcome to today's Tuesday Times Roundtable. Today is our first session that is in person. My name is Jenny Mendoza Farjan, and I'm the Senior Program Coordinator here at the Office of Global Learning Initiatives. The Tuesday Times Roundtable is our flagship discussion series that brings together multiple perspectives on global issues and trends. And today's topic is about Credit 101, how to build, manage, and improve your credit score. We're going to explore on building and maintaining a healthy credit over time, and also to support the financial confidence and long-term goals. We do have a fantastic panel today from Bank of America that I'm going to be introducing shortly. But before, as a reminder, everyone needs to sign in, please. So just scan the QR code if you haven't done so already. This is what we use in order to track the attendance, whether you're here for Global Learning Medallion points or Honors College engagement points or extra credit for your professor. This is going to be the way how we're going to be monitoring that. Also, as you engage into this session, we ask you to raise your hand. We're going to have a couple of microphones around the room. So we want to make sure that we capture your engagement in the recording. Our staff is going to be handling that over to you. Okay, so you haven't heard about our office. We are the Office of Global Learning Initiatives, and within the office, we have the Global Learning Medallion Program, Peace Corps Prep, and also Millennium Fellowship, scholarships and fellowships as well. So feel free to visit our website, go.fiu.edu/students, or also our Instagram page. Also, the office has at the moment a fantastic contest. It's called the Transformation Contest. This is available for all undergraduate students. The deadline has been extended until February 8, 2026. If you would like to participate and share an international or intercultural experience that was transformative for you, feel free to go to go.fiu.edu/GL contest. This is going to be to win a trip to Washington, D.C. and connect with government entities, nonprofits, and think tanks as well. And as you know, the Tuesday Times Roundtable are always connected to a news article. This particular week is connected to the Bank of America news page on building financial habits. You may access this page by going to go.fiu.edu/TTR0203. And we connect them also to the SDGs just to continue the discussions and also create a connection as well with the Sustainable Development Goals. Today's session is connected to SDG number 8, which is about decent work and economic growth. If you would like to learn more about the targets, the indicators, and the progress of this goal, go to go.fiu.edu/SDG. Okay, so now it is my great pleasure to introduce today's moderator, Paola Osorio, a financial center manager at Bank of America. Paola is a banking professional with 33 years of experience and currently serves as a financial center manager, a better money habits champion, and a training leader. She is deeply passionate about developing strong teams, empowering clients to achieve financial confidence and enriching the communities that she serves. So please join me on welcoming Paola and the team.
Hello, good afternoon. And I know that Paola is going to be doing the presentation, but I wanted to also introduce myself. My name is Obando. I am Paola's leader. I'm the consumer banking market leader for the Miami South market at Bank of America. And it's so nice to be back home. I am a fellow Panther. So seeing the growth and seeing this great initiative that we're doing here today is amazing and empowering. So thank you for taking the time to come in. We have a great presentation for you learning about credit at Bank of America. community, helping our youth and young adults or students is one of our key priorities. So I want to thank the team for really having us here today and welcoming us. So ask questions. This presentation is about you. You know, once you have that, engage. And then we did bring some swag, some Bank of America things that you guys can take, but very excited. And then at the end, we're going to go around to provide our information if you want more tailored one-on-one solutions or an appointment, we can definitely do that. So Paola and Veronica, who is one of our amazing senior bankers with Bank of America, is going to do a great job in presenting. Thank you so much for having us.
Thank you. Thank you, Veronica.
Hi, good afternoon, everybody. My name is Veronica Castellanos. As Betty mentioned, I'm a senior banker. Been working at Bank of America for about 4 years, but been doing banking for 23. So please feel free to ask questions and engage. We are very excited to be here today.
And good afternoon. Thank you so much. We are so excited to be here today. I was introduced, my name is Paola. I'm Financial Center Manager. And one of my passions is I am a Better Money Habits champion. And what that means is that I go out to the community and really showcase what financial literacy is all about. It's very important. We have many topics. And the topic here today is probably one of a very, very crucial topic that we all want to know about, which is managing credit. At Bank of America, we have our purpose, and our purpose is to help make financial lives better through the power of every connection. And being out in our community, it's huge because we're able to give back that financial wealth that everybody needs. So I hope you guys enjoy it. Please, this session is for everyone. So I want you to ask as many questions as you can. If we can't answer, we're going to have those. We'd love to have that one-on-one session for you that we could have that kind of tailor approach to what your need is. So thank you so much, and we're greatly honored to be here. So with that said, let's start. Okay, so building good credit goes beyond finances, right? It's a key milestone to the path to freedom and stability. Okay, so that's something that we want to make sure that everybody knows. Having that good credit really builds that stability in your financial lives. So what is credit? So credit is the definition of credit is basically borrowing money with a promise to pay. And within borrowing that money comes a fee, an interest that's charged, something you could pay for that you maybe don't have the funds immediately, but you're able to manage with having that credit. Okay, credit comes in many different types of forms. Okay, the most common form of credit is credit card. How many of you have credit cards? There you go. So credit cards is very important in our financial lives. It's very important also to know that we have many different types of credit cards. And when we're making that decision to apply for a credit card, that we really know what type of credit card we're applying for. Okay, it also comes in a form of homes. If you want to purchase your first home, you're going to need that credit. If you want to purchase a vehicle, a car, you're going to need probably an auto loan and student loans. So many of you maybe do have student loans. So all that is in a form of credit. In order to apply for credit, they need to review your financial history, right? What history you've had in the past. And also if you've paid on time, if you've really haven't gone over maybe your credit limit. So all that is considered when they're making a decision to really give you an approved for credit. Okay, the better the credit, the easier will be for you to get approved. Okay, so moving on, let's go to the next slide. So credit cards. Okay, so there are two types of credit cards when you start building credit. The first credit card, let me show you the two types of credit card. There we go. We have the secure credit cards and we have the unsecured credit cards. But for these two types, there needs to be an application, right? Now, the difference between a secure credit card is that it starts your credit. It starts building your credit. So if you've never had credit or if you need to rebuild your credit, this credit card is the best way you could start that history. Okay, it starts with a security deposit. Usually, the security deposit is the same amount of the credit card limit that you're going to be having. Okay, in some cases might be a little different, but the majority of time that is the way that the secure credit cards work. Okay, it really, that security deposit that the banks put, it's really going to be there for the term of that agreement that you have with a bank. So if it's for a year, then we want to make sure that the security deposit stays there and it does not get touched. Now, it's very different from a prepaid credit cards. So sometimes there's prepaid credit cards that you could actually pay, and then you'll have that Visa that you could go and make your purchases. But the difference is that the prepaid credit cards do not start building your credit. The secure credit cards do. So that's something very important that you need to have in mind. Now, unsecured credit cards, which is the most common credit card, it really is in the promise of how your credit history has been built. So that credit card, they do an application, and based on how you've been managing your credit, it's how they're going to give you the credit limit. Yes, absolutely.
Hi.
Hello, hello.
Hi, thank you for coming.
Thank you.
My question is about the credit history. I'm not from America, so it's all new to me, but I've read that there are parents who open a credit card in their child's name and then they start building their credit. But how does that make sense? Like the bank knows that the 5-year-old child is not paying back the credit. So
thank you for the question. That's a great question. Sometimes if the parents do add an authorized signer to be able to use that credit card, that authorized signer is not building credit. So it's just an extension of the parent's credit card. So it's really not creating that credit history that you need in order for you to establish a good credit.
is there a minimum age where you can start building your credit?
Yes, 18 years old is when you start building your credit. Okay, and we're going to touch a little bit of different ways that the banks are able to help you even before you turn 18 to establish a relationship like that. So great questions. And I do encourage, give us more questions. This is why we're here. We want to make sure that you leave here knowing everything about managing credit.
No, then I have another one.
I love it. Go ahead.
So, does your credit score ever expire? Like, let's say you have bad credit score and you leave the country for a few years and you come back and you restart.
So your credit, it doesn't expire. It does stay there, your credit history, but it does stay for a certain amount of years. Okay, so if you leave for over 10 years, you might have to start rebuilding credit. You do have a history, but maybe it's already been too long and there hasn't been any reportings after that. So excellent question. Good. Thank you. Okay, so unsecured credit cards, also we want to make sure that we talked about knowing the fees and knowing what your credit cards that you're applying to. Same thing with unsecured credit cards. You want to read that agreement. You want to make sure you know exactly what interest rate you're going to be paying. There's many unsecured credit cards that come with introductory rates out of 0%. So you want to make sure that you're maximizing that time with those credit cards. Okay. Again, with the secure, really going back to that, after you've established credit, that's kind of where you graduate to go into the unsecured credit card. So that's kind of like your goal, that you graduate from that secured to the unsecured credit card. So that's something you want to make sure you always have top of mind. Okay, so we're going to talk about building credit from scratch, and Beto's going to share a little bit more information about that.
Okay, so the best way to start building your credit is go ahead.
I'm sorry, but why would I want to go from a secure credit card to an unsecured credit card? I don't know if you answered it.
So the reason why you want to go from a secure to an unsecure is, remember, the secure credit cards have a security deposit that you gave the bank to be able to build that credit. So you're kind of, when you have that secure credit card, that's your time to build that credit, because eventually we will give you that money back, and then that's it. You are based on what the banks are lending you. So that's kind of where you really, because you start building credit from day one with the secure, but your goal is really to get your deposit back and now have a full credit with whatever institution that's providing that credit for you. Excellent, thank you.
So opening a checking account with a financial institution will be the first step to establish credit. This is not going to report any type of credit to the credit bureaus, but it's going to help you establish a relationship that is going to wait at the time that you apply for credit, you know? So as Paola mentioned, opening a secure credit card, you give your money, 200, 500, whatever amount of money you're going to put down for this credit card, that will be your line of credit. That is how much money you are going to be able to use for your purchases. Depends on how you use it, your responsibility, you're paying on time and all. The bank will, as Paola mentioned, graduate you from a secure credit card to an unsecured regular credit card, give your money back, and maybe increase your line of credit. So now you will be going from a secure credit card to a regular credit card because you had a responsible relationship with the bank by paying your account. Prepaid credit cards, those are not any type of accounts that are going to help you build your credit, as Paola mentioned. When you apply for a credit card, if you get turned down at any time, don't reapply right away. Just give some time for your credit to start working, and then we'll try to do another credit card application. Every time you run your credit, your score decreases, okay? So it hits your credit score every single time a hard inquiry gets applied to your credit. What else? If you have the opportunity to have someone co-sign on a credit card for you, that is another way to help you establish a credit relationship, keeping in mind that the other person will be responsible as well for the debt. If you don't pay, the other person is going to be affected as well. So that's where the responsibility goes when you decide to have a credit card.
Hi, yes. Again, thank you for coming out and giving us some of your time. Could you elaborate on hard inquiries and soft inquiries? Um,
Absolutely. So the difference between hard inquiries and soft inquiries, usually the banks, whenever you apply for any type of credit with any financial institution, those are going to give you the hard inquiries, okay? Those are going to be the ones that really going to affect that percentage, and we're going to learn a little bit more about that, of your FICO score. Okay, the soft inquiries usually don't affect that directly, and usually is done maybe by some banks that pull like a FICO score only, not the actual credit history, or maybe your landlord, because they just want to see where you're at with your FICO score. So there's certain types of inquiries that don't really affect that FICO score, and that's one of the ones that you need to be alert from. Okay.
just a follow up. So, let's say my bank has an app and it has a feature that says
Yes.
check your credit score. That'd be a soft inquiry.
Correct.
Okay.
Correct. Because that one's not, you're not applying physically to any type of loan. So great question. Thank you. Excellent.
And that, as you mentioned, those tabs that you see on your mobile banking app, that helps you manage your credit. And that is something that you really want to do often. Okay. So ways to use your credit responsibly, okay? Before you apply for a credit card, whether it's secure or unsecure, you need to really shop around. See what benefits are you going to have with that credit card, if there's going to be any introductory rate at 0%. most credit cards or some credit cards will give you certain amount of months without having to pay any interest. Some other cards give you cash rewards, travel rewards. So you will have to shop around and see which one is the best credit card for your needs. And when it comes to the secure credit card, you look at for the rates and the security deposits that you're gonna have to put down for these cards. Don't overspend, okay? Try to use the credit card for what you really need. I personally try to use it as my debit card. I use my credit card for the money that I already have in mind that I'm going to use. You know, I have an auto pay for my car insurance per se that it takes out of my credit card. Why? Because I already have that money set aside for that payment. So when the credit card gets used for this car insurance payment, it helps me get rewards on my credit card, help me my credit, and I have this money, pay what I owe, and that will be the best way. Not overspend and use the credit card for what you already have in mind to use, and the money aside to pay for it. Okay. Use 30% of your credit. Per se, your credit card is $1,000. Use 300. That's the goal. Maximum 300%, which is the 30% of your credit line. That way, it's easier for you to pay, and you don't go over when it's time for the credit card to get reported to the credit bureaus. 2 days are very important to remember when it's time to make any type of payments. The due date and the billing cycle date, okay? You want to pay in full in order to avoid any type of interest. If you owe $80 on the credit card and you only pay $60, then those $20 is going to start occurring some interest for the next month. But if you pay the full amount, then no interest is going to be assessed to your account. And for the billing cycle, if you paid everything, then it's not going to be any type of debt reported to the credit bureaus. Do not close credit cards. Keep your credit cards open. It's not good to close credit cards, okay? And always use the card wisely and responsibly.
But Veronica, if I can ask a question. So you mentioned don't close credit cards, but what about when you have fully paid your credit card and it automatically closes?
When the bank closes for inactivity, that it does have a hit on your credit, but it's not as much as when you close it yourself, okay? So when you decide to close your credit card because you don't want to use it anymore or any other reason, it's going to have a big effect on your credit score. But if you let it close for inactivity, it's going to hit as well, but not as much.
And the reason, just to clarify that, if you do close the credit card, why it impacts you so much, you're raising that credit history. So maybe this was the first card you started with 10 years ago. And you decide, well, this card is not really giving me, a lot of rewards, so I'm going to close it off. But then the moment that you close it, you're also closing those 10 years of history that you built with that card. So maybe set it aside, use it for one thing specifically, and then use the other card that is going to give you more of the rewards and more of the benefits. You want to be strategic when it comes to that piece.
And on that note, because you mentioned like one card and the other card, so I've heard a lot of myth from people. I don't know if it's a myth, maybe it's true. Sometimes people will encourage you to get multiple credit cards, and that would also help to sort of push up your credit score. Is there any truth to that?
Yes, absolutely. And one of the parts or the percentage of the FICO is the different types of credit that you have open. So you could have revolving credit, you could have an auto loan credit, you could have a home loan, so a mortgage credit. So all that just makes the credit stronger because now you have a history that's reporting different types of credit. So there is also having several revolving credit cards that's kind of opening up your credit. So now your limit, it's a lot higher for the percentage that you're using. So, don't go out and get a bunch of credit cards, but have the right amount and the right balance to be able to have a good credit score. We have another question?
Yeah. So is it possible then to transfer, since you have this credit history with this institution, is it possible to upgrade, transfer credit cards? Like, um,
So so that's great. Yes, there is many ways, and there's all it's what we call balance transfers within banks. And what that means is that maybe you have a credit card with a high balance, and you're paying a big interest on that credit card. But guess what? There's another bank that's offering you that if you transfer that credit card, that balance over to that bank, they're kind of going to give you like maybe a 0% for a certain time that you're going to be able to save money. So you could do that. We recommend, like we said before, maybe not close that other credit card, but kind of transfer that balance to that other credit card that's giving you a better rate. Again, that's if you have that balance. We usually recommend that you don't overspend on credit cards because it does affect. But if you do have that balance, that is an option for you to do, and it will help you with the interest rate that you're paying. So great question. Awesome questions. This is great. Anybody else?
You mentioned that there's okay, that there's an ideal number of credit cards. What's that ideal number of credit cards?
So it's different for everyone because it really depends on the amount of time that you've had credit open. Just make sure you want to make sure you have a Visa, MasterCard, maybe an American Express, just because you want to have a variety of where you could spend the credit or where you could use the monies. Okay, so buying a home, they do request 3 lines of credit. And if you have 3 credit cards, that would be your 3 lines of credit. So that's one of the things. But it's always depends on each individual's credit history and where you're at in credit. Excellent. Thank you so much. So let's go to the next slide. Okay, so what is a good credit score and what does it mean? It doesn't matter. So a credit score is a number, and this number helps the lenders determine where you are in your credit history. So the lenders, like the banks, insurance company, landlords, kind of look at this as a guide to see how you've paid your obligations? Have you paid your finances? There's many different factors, and we're going to go into some of the ways that the credit score, that FICO score, is kind of calculated. But once you have that score, it's also going to determine what rates they're going to give you. So the better the score, the better interest rate you're going to get. Now, what are the scores? So you could see up on the board, you could see it goes from a very low credit score, it poor, to 300 to 579. That's a very low credit score. Then it goes into the fair, which is between 580 and 669. Then we have a good score. Okay, so anything over 670 to 739. And then we have a very good score, 740 to 799. And then we have the exceptional credit score. So these are the scores that go anywhere from 800 to 850. The average score we've seen, it's around 717. Okay, so that's kind of where the average falls. But we've seen a lot of 800s. And if you really manage your credit and you're really determined to review, because it's important, not a lot of Americans look at their credit score, or maybe their credit score they do, because a lot of banks now have the ability, like you said, to look at your FICO. But really knowing the history of the credit, it's also important, okay, because it keeps your all your information that's up to date. Okay, there are 3 major credit bureaus. Okay, these 3 major credit bureaus are Experian, Equifax, and TransUnion. Okay, there's also a website that gives you that credit report for free, and it's myannualcreditreport.com. We strongly recommend that you at least do that once a year, if not more often, because like I said, especially, we have a lot of cases where there's a lot of maybe account takeovers, identity fraud. So you want to review that to ensure that everything in your credit report is correct. Okay, so those are one of the ways that we do that. So let's go to the next slide. And this is probably one of my favorite slides. And this is what makes up a credit score. So you see up on the board, there's percentages all around the what makes up a credit score. So let's start with the 35%. And 35% is paying your bills on time. So imagine if you are past due, and like Veronica said, you want to make sure you always pay before that due date. Because if for whatever reason you are past due, this could hurt your beacon score 35%. And that's a big chunk. So you want to make sure you set up your alerts, maybe put automatic payments. That's something else that we recommend, because that way you're always going to ensure that all your debts are paid on time. Okay. Then we have 30% is amounts owed. These are the high balances. Okay. So if you owe if that credit card you owe $1,000 and you kind of use that, you overspend and you wanted something, you went out and you got it. If you don't pay it off completely and that's your only credit card, guess what? That's going to hurt you, because you're you're maximizing the capacity of your credit. So that's something else to look at. That's 30% of your credit score. Then we have 15% is length of credit history. So I think we talked about this one. How long have you had that credit card? Why is it important not to close that oldest credit card? Because maybe that's the one you got 10 years ago. And that's the one that's been carrying when your credit history was open. So that's another one to take a look at, okay? So 10% is the credit increase. So we have the hard inquiries, those inquiries that banks do, that could hurt you 10% of the time, okay, on that beacon score. Okay, and then 10% is the types of credit. And I think that was your question. So what types of credit do you have? Do you have checking, do you have credit cards? Do you have mortgage? Do you have auto loans? So that's kind of 10%, because the banks want to see that you're able to pay different types of credit cards and different types of loans, okay? Any questions on this one?
I do have a question, and
Yes.
it's mostly on student loans. Where do you see that reflected in the percentage?
So that student loans, it's pretty much the same thing. You want to make sure you pay them on time, unless they're deferred, because most of them might be deferred, and that's not affecting you until they actually go live for you to pay it. So you want to take a look at those agreements of, okay, when is my student loan going to come when I have to pay it? And then you need to make sure you pay it on time. But that's...
Type of credit, right? They belong to the type of credit.
Yeah. Perfect. Thank you. Okay, so where do we get our credit score? So there's many banks that offer FICO scores, and that gives you the ability to know where you're at in your scoring. There's also ways, and Bank of America has just created something very neat. It's called My Credit Program. And in here, not only do we actually give out the FICO score, but we have simulators as to kind of talking about, okay, how about if I pay this credit card late? This happened, unfortunately, I had an emergency. How is that going to affect my FICO score? So there's a simulator kind of telling you, if you do this, what's going to happen to you? Or if this already happened, what do I need to do different in order for me to increase my FICO score? So that's something that we do, but many credits, and once you have a credit card, you're going to find that there's information for you to kind of dissect where you're at yourself, and see how you can make it better. Or if you're just starting your credit, what do we need to do to kind of build that credit score to be the highest you can? So there's many different ways. Also, there's videos, there's education, and we talk about better money habits. We have in our website all types of articles, information, guides on helping you kind of guide you to what you need to know in order to make sure that your credit is good. But very important, you could reach out to the different types of credit bureaus. Also, there's information if you do have a dispute for whatever reason and you find it in your credit bureau. What do I do? How do I dispute this? And there's actually samples of letters to different types of agencies that could give you an idea how to dispute these items that are in your negatively impacting your credit score. So these are great things to know and really to have handy because it could happen to anyone. Okay, so now we're going to talk about what is a credit report.
So what is a credit report? A credit report is the history of all of your accounts that have been reported to from public records. This not only includes your credit cards, your loans, if you have a mortgage, any type of active accounts, but also reports your current address and previous addresses. If you have ever changed your name, what name you used before, your employers, okay? So it's very important, like Paola said, to go and take a look at your credit. You have access to get your credit report once every 12 months for free. And any of the credit bureau's agencies, they do have mobile apps that you can go there and check. You want to make sure you check and that everything is accurate and you don't have anything that doesn't belong to you on your credit report. And if you do, like Paola mentioned, there is ways for you to get in contact with them and get that corrected. Also on your credit, sure.
My question is, why is it that there tends to be like kind of like a discrepancy depending on where you check where your credit score, what your actual credit score is? Some places will tell you it's like there will be like a 10-point or maybe like 15-point difference depending on where you check.
It's usually depending at the time they report. Okay, not all the credit cards and all the lenders report at the same time. So sometimes some credit bureaus get the report before the others, and that's why the discrepancy might be.
Or so sorry. So the my annual credit report thing, really great idea and tool and resource, phenomenal. It's free, but does it also not penalize your credit history? Like, is there also a like because we're talking about hard pools being like penalties, having penalties on your score.
Yeah.
This doesn't do that.
No.
Wonderful.
It won't impact you.
So it's kind of that soft credit we talked about. It's not going to impact because you're pulling your own credit. You're reviewing your own information, so it will not impact you at all. Great question.
Okay, so if you guys want to take a picture, this is the information you want to have in hand in case you ever need to get in contact with any of the credit bureaus, okay? I want to ask you a question. What is the percentage of Americans you think they actually review their credit on a yearly basis? What do you think? Okay, what do you think?
I would like to think about 20.
Actually, 35% of Americans review their credit history, which is a very low number. This is something that we really need to take a look at often. We need to make sure everything on our credit report is correct. So, like I mentioned, if you download an Experian app, you can create an account there for free and you'll be able to view. As Paola mentioned, if you have a Bank of America relationship, now you will be able to view your credit through My FICO on our Bank of America mobile app. And if you don't have a relationship, come forward and I'll help you get there. So keeping in mind the importance of checking your credit, do it as often as you can. There's many ways to do it, but getting that credit report once a year it's very important. That way you keep all your information accurate and making sure if you have anything that doesn't belong there, you get it fixed.
And we talked about suspicious, like I said, and I can emphasize how many times we've seen identity theft. You need to be very cautious. And this is something that we really want to make sure that everybody checks their credit report because this is the way that you could catch it and you could catch it quickly. And that's going to be a lot easier to fix.
So you would say being as preemptive as possible, checking annually is the best way to combat
Yep.
identity theft.
Absolutely. Absolutely.
Do you have any recommendations for like what to do if, let's say, we catch it when it's already occurred? Like, who should we contact?
So one of the most important parts, if you do, and great question, you do notice any suspicious activity, you wanted to immediately block the credit bureaus, and there's a way that you could kind of put that extra blanket on that credit bureau. So anybody attempts to apply, what the alert and the block does is that they need to contact you first before continuing. And banks cannot do anything until you unblock that credit report, that credit. So that way you're preventing anybody else from going in. Now, after that, you kind of have to go back to where it occurred and prove, hey, this was stolen information. This was not me. Once you do that, you want to also go back to the credit bureaus and say, and report it as this is suspicious, this is a fraud. So you kind of want to cover all your bases, okay, to make sure that you have a record until everything gets cleared out. And you want to keep track and follow up to ensure that everything is clear. So if God forbid that does happen, you want to make sure you take the proper steps. Okay. Excellent questions. Thank you. So we're going to talk about now do's and don'ts of improving your credit. So do keep your balances manageable. Don't go out shopping. So if you get that credit card, you get this $10,000 limit, don't go on a shopping spree. Make sure that you manage it with what you know you're going to be able to pay back. Okay, that's very, very important. Remember, you don't want to go over that 30%. Remember how much that hurts. Make your credit card payments on time every month. Set up those alerts, those automatic payments. Go into your mobile apps, review where it's at. This is going to help you ensure that you don't pass that due date. Keep credit accounts. Remember that history, that oldest account is very important. So always know what you have, what credit cards are open. If for whatever reason you do need to close one, know what's going to affect you, how it's going to affect you. So really educate yourself as to what you need to do. Check your credit report. It says minimum once a year, but I would probably do it more. We want to make sure, and we encourage you to at least check it 2 to 3 times a year. Okay, because that's important. You want to prevent anything else from happening. Okay, so don't exceed the limits. Okay, don't miss payments. That one's going to hurt you, that 35%. Don't go applying for a million credit cards. Okay, so you go to the mall and they say, hey, I'll give you 20% off, or I'll give you this, or I'll give you that. Not if you're really, you're just doing it for that. Really think of if you're doing the right decision for you. Okay, so that's what you need to think about. And file for bankruptcy. Unfortunately, this will hurt you, and it could hurt you in the long run. So be very cautious when that happens. Okay, any questions? Got a lot of questions.
So you mentioned about those institutions in the malls, and I wanted to ask, what happens, let's say, if you do open up a credit card with um, one of these institutions, for example, Sears, and that institution no longer exists, it goes bankrupt. What happens then to that credit card?
So many of them are tied to a bank, and that's very good. And they're tied to an actual bank. So you will still owe that credit card. So even if Sears is kind of gone, you're still going to owe that credit card. You still have to pay that credit card because it goes back to the institution that gave you that credit limit. Very good question.
I have a question about you have a lot of credit cards, you don't want to apply and then receive that email that says, or mail, you have been pre-approved, just enter the number and you're going to get approved. And then, oh, sorry, not approved. So what happens?
So that will be a hard inquiry in your credit. Definitely, many of the banks kind of guide themselves as to that soft credit check, that FICO score that's out there, and they know you have a potential to get pre-approved. Once you apply, now we're going into that credit history. Remember I talked about, now we're looking at everything in your credit history. We want to look at income. We want to look at what's your credit limit out there. We kind of review everything. So once that's done and it's not approved, then that percentage is going to hurt you. Remember we talked about that 10%, I believe it was, that's going to kind of affect your credit score. It's not a big percentage, but you know, if it does happen, that's probably one of the reasons why. Very good. Anybody else? I know I saw some other questions. Yes.
I had a question. I've heard about like a lot of businesses using bankruptcy as a tool and kind of as a benefit. Is that a difference between the individual and a business? Because you said if the individual goes bankrupt, it's bad, but I've seen like a lot of businesses use bankruptcy as like a positive thing.
So, bankruptcy, even if it goes through a business, there's always going to actually be somebody guaranteeing it. Okay, so like a guarantor, that person behind that business that kind of said, "Hey, I'm here to support this business." It affects you. It could go back to the individual, depending on who the guarantor is. So there's many different factors that could go in there. I don't see it as a positive thing to go bankrupt, even as a business. I mean, unfortunately, it happens. But there's also that guarantor in the background that could be affected by that bankruptcy. So that's something that they need to be cautious and determine if that's the next move for that company. So great question. Anybody else? Oh, good questions you guys have. Okay, so we share to avoid. Now, paying down credit card debt. So, you know, we're going to use that credit, right? It's there available for us. So if we are going to use it and we do have balances, we want to make sure that we're going to pay it correctly. And just making more than the minimum payment makes a huge difference. So here we have an example of a $3,000 balance on a card. If you pay, and this is based on a 13%. I don't know if you guys know how much credit card rates are going right now, but 13%, it's a very good rate. Usually they go for around 30%. Okay, so 13% is very low. It's a nice rate, but look at the difference. If you kind of just make the $100 month payment, you're going to pay it off in 37 months. The total interest is $657. So the total cost of that debt is $3,657. Now, if you just make $100 more, so $200 payment, you're going to cut that down to 17 months. That's a big chunk of the time. You're going to only pay $300 on interest, so your total debt would be $3,300. So really pay more. Even if that month you don't have more to pay at least $10. That makes a huge difference because this is accrued interest. So you want to kind of drop as much as you can to be able to pay that credit card off as soon as possible. So these are just some of the scenarios. Now remember the 50-30-20 rule. Okay, 50% of your paycheck should be needs, 30% should be wants, and then that 20%, it's kind of saving, but also goes into this debt to pay off those credit cards. So always have your budget. You know, and this is another topic that we could always come back for. Budgeting. You want to make sure you know how to manage not only your credit, but your expenses and kind of know where those percentages should go to have a very healthy financial life. Okay, and then that's it. So we talked a lot today about different stuff. Why is credit important? Okay, it's crucial for your financial health. Building good credit will give you good rates. Trust me, the banks take a look at that and they'll give you the best rate out there. Even when you go buy a car, you go to the dealer, and if you have that excellent credit score, guess what? You're going to get the best deal on that vehicle. If you have little or no credit, or you're just starting out, I think we had a question about starting out. Start with a checking account. Even if you're less than 18 years old, we focus a lot on youth and young adults because this is a way to build a relationship with a bank. This is the perfect way for us to guide you. And once you turn 18, you have that history and that relationship with the bank that would help you. Okay. Two types of credit card. Remember the secure and unsecure. See where you're at. Never had credit. Let's go for that secure credit card. or the unsecure. It gives you look for the best rates. Credit scores, know your percentages. I encourage you to go through our Better Money Habits. Bank of America Better Money Habits is going to have all this information I just shared with you. And like I said, there's also simulators. You could go in there and kind of see where you're at. And avoid paying too much interest, okay? Always pay more than the minimum payment. That's important. We don't want to buy something and then it costs you 4 times more than what you wanted to pay for. So really be wise about how you use your credit. And any other questions? Yes.
Do you recommend students build the credit despite they don't have a work or they don't have a job?
So you could, if you have income, if you have your parents' income, you have allowance, it's always good. Again, we want to make sure that you don't exceed what you could spend because you want to make sure you stay within that. But it's a possibility that you could. You could disclose that on your application, and then they'll let you know if you're approved. But absolutely, you want to start early.
Thank you.
Thank you.
I have a follow-up question. I work with international students and I know that they don't have social security numbers. So how does this work if they want to have a open account, have a credit score, like with no job, no social security number?
So, great question. Like I said, if you do build a relationship with a bank, there's possibilities. So that would be, we could have a one-on-one session with that student. There's always ways, depending, what we could determine as to what income, but we could guide them to the proper way of starting.
So social security is not like a
No,
must.
we actually do have many of our clients that maybe don't have a social security, but they have a relationship with us and they've built that,
Especially with students.
yeah,
As long as you
especially with
have the
students.
students, so the J1, the F1 visa, because
Yes.
they're here, studying. We are actually one of the few we're actually one of the few financial institutions that offers that. So we will open those student accounts for our international students. We will welcome them, and make sure that we guide them, especially coming to a new country where, things can be very different. We want to make sure that they know every step of the way, how they can manage a relationship, how they can start building that here. And then credit is something that we can also help with down the line as well.
Make sure to send our students to you.
Please. We would love to meet them.
Yes.
To that point, our excuse me, our credit system is definitely like uniquely American, right? Can you speak a little bit about like the benefits of this kind of like individual kind of number system that we have for credit? And then if you have that like background knowledge of comparatively, like can you compare that to how credit or loans or debt works in some other place in the world?
So we definitely will guide you with what works in the US. We can't really compare as much to another country. We obviously understand, and living in Miami, we are in a melting pot. So we see, different cultures, a lot of diversity there. What we want to make sure, if a student comes and sees us, even if they're coming from abroad, is that we're going to guide them in what's going to make them successful here. A lot of our international students are here on study, but they have plans, to stay here down the line. They find a corporation that's going to sponsor them, that they're going to be able to create a life here. So our ultimate goal is to help them and guide them in how things work in the U.S. and what would work for them. We actually work a lot at Bank of America with new to the country, not just students. So new to the country, folks that are coming in, working here or getting employed. We want to set you up, get you on your 2 feet, and make sure that we guide you through that process. So not so much of comparing, to what's out there in other countries, because we don't have that knowledge, but more in guiding you and helping you build so that you can have a strong relationship and so that you can feel confident that you can definitely make it here in the U.S. Great question, though.
So I know that buying a house could get you in like the 800 range. Can you talk more about like buying things? Is a house the only thing that could really boost up your credit that much? Or is there anything else like that you could like I guess assets you could purchase maybe?
So there's no particular buying a house does help you, obviously, but there's other ways you could increase your credit. And remember, it determines how long you've had your credit open to. So buying a house, we are going to require maybe the 3 lines of credit open. But eventually you could also get a high credit score with just having credit cards and maybe auto loans. You could still get there. Just making sure that you have that open credit, that you don't utilize too much, and that you pay on time, and you don't do that many inquiries. You kind of manage it the right way, and you could get to that 850 credit score.
I would also say, just to add that for students, the biggest purchase that they have usually is their first auto loan, right? So that auto loan will help you. You know, to your point, you're asking about buying a house. Not necessarily, doesn't have to be that, but you can have credit cards, and once you have that auto loan, it is a larger loan that can also help boost your credit and continue to build that and really show banks, okay, this person is not only managing, you know, cards, but they're also managing a larger expense like an auto is. So normally students, that's the first large purchase that they have before they go down the line and into purchasing a home. Any other questions? Thank you so much for the engagement. An absolute pleasure to be here. Veronica is going to go around now with her consent to contact. What that is just you giving us the permission to, you know, reach out to you if you have more questions. Paola mentioned we could have that one-on-one session in guiding you to get there, not just with credit. You know, we cover absolutely everything. We are very confident at Bank of America that we can help our clients from the moment, even before they're born, all the way until retirement. We have guidelines and anything that can help you and get you to reach those goals that you have. So thank you for your time and the questions, and just for welcoming us here today, the team. Thank you so much.
Thank you, guys.
Let's give them a round of applause. Thank you so much.
Thank
It was
you.
such a pleasure to have you. And also, I think we all learned so much from your presentation and also the work that you do as well. We truly appreciate you being here with us today. We look forward to having you again.
Thank you. Thank you. Thank you for having us.
And as a reminder, yes.
So if they want to
Take your goodies.
Yes, and if you feel free, if you would like to connect with the presenters, they're also going to be here after we're done. So feel free to come over as well and talk to them. Just as a reminder, TTR continues again next week, and I'm just going to put a quick slide right here. We're going to have a presentation on building soil and community, regenerating farming and the generations led by the earth and the environment department here at FIU, and also Lion Farms. If you would like to provide us with feedback about today's session, feel free to scan the QR code that is on the screen. We truly appreciate your feedback as this continues allowing us to improve the sessions. And then lastly, if you didn't get a chance to sign in, we're just going to ask you to scan the QR code and sign in as well, so that way you also get credit for today's attendance. Thank you so much for coming today, and I hope you have a wonderful day.